Welcome to another analysis video from Learn.Invest.Achieve channel. Today, we'll talk about All State Corporation, which is an American insurance company, ticker symbol ALL. But before we start, I want to remind you that this video is not financial advice and for entertainment purposes only. In my opinion, this stock is selling at a discount, and as a value investor, I look for such opportunity. If you are new to this channel, I go over the annual report or the 10K report that the corporation file with the SEC, and I collect the data from all three financial statements, the income statement, the balance sheet statement, and the cash flow statement to create this analysis report. And you can view and download these reports from the SEC website directly, and I made a video showing you how to download these reports, and I'm gonna put the link on the top right corner of this video. All State Corporation is in the property and casualty insurance industry. The market of this industry is $203 billion in 2022. After I collected the 2022 revenue for all of the 35 US corporations operating in this industry, I can say that All State is the market leader in this industry in 2022 because it had almost 25% of the market. Progressive is number 2 with a $1.8 billion difference in the revenue. Also, All State and Progressive have 1/2 of the market share, and all of the other 35 companies compete for the other half. You can argue that there are more companies in this industry that they are not in this list, and I agree with you, like for example Geico, but these companies are not publicly traded companies, so it's hard for me to find their 2022 revenue to include them in this graph. Now, after knowing that All State Corporation is the market leader in the industry, let's check the growth of the revenue over the past few years. The revenue is increasing every year except in 2020 because of COVID. 2021 and 2022 show that the revenue growth continued as if there was no decline in 2020. In 2022, the expenses were more than the revenue, as we can see in the gray and blue lines in the graph, so the firm reported a negative net income in 2022. And in my opinion, I think this is the reason why the stock is undervalued. But I don't really care about the net income because I think the free cash flow is a better way to value a stock. Scrolling down to the free cash flow graph, it shows a considerable change in 2022 free cash flow, but the graph is kind of misleading because the free cash flow only went down by $70 million, so I'm not worried about it. I agree with you if you conclude from the graph that the free cash flow is not growing year over year, and I also agree with you if you think it could be a concerning matter. Checking the corporation debt, this 8% debt to asset ratio must be the lowest I have seen for a mature corporation. And looking at the times interest earned ratio, All State Corporation can easily service the debt. Moving on to the outstanding shares graph, they did a great job reducing the outstanding shares because since 2017 the corporation bought back about 29% of the outstanding shares, which is, I think, an amazing job. All State Corporation is a dividend company, and in 2022 they distributed $3.40 per share, which makes the dividend yield about 3.2%. Now let's talk about the valuation. In my opinion, the 2023 revenue will be around $52.5 billion, and I'm using the investments to revenue ratio that's very consistent. I think that the total free cash flow will be around $4.8 billion, using the outstanding shares in the 2023 Q1 report, 2.5% discount rate, and 17% return on investment ratio. The intrinsic value of the stock is $104.35, which is very close to the current market value of the stock. In my opinion, this stock is currently discounted because 17% return on investment ratio is an opportunity that doesn't happen that often in the stock market, especially if it's a dividend company. Finally, I encourage you to invest in this channel by subscribing to watch more analysis videos. Thank you and see you in another video.